Hello guys, welcome back again. So in today's topic, we are explaining the terms stop loss, take profit, pending orders. Now in forex trading, especially retail trading, these are automations. These are things that you set and they get triggered on their own. Okay. So this video we want to explain these terms, why we use them in forex trading and how you're going to use them. If this is your first time watching our videos, make sure you like, subscribe to this channel. This playlist in particular is where we explain forex terminologies for beginner traders and people who may not understand the terms in trading. You can go through our YouTube channel and find any resource that's going to help you in this channel. Make sure you watch to the end, because if you watch to the end, I'll give an example, a trading example that's going to illustrate these terms in real life. That being said, let's go into it. Now, beginning with pending orders. Pending orders are market executions that you set when you are not there, they get triggered. Okay. And I'm going to explain the four major pending orders we have in trading. It's just like you want to buy and you sell, and then you go into your trading platform, you input the trade you want to buy or the product you want to buy or sell, and you click buy immediately or sell immediately, and that position get triggered immediately. We call that in trading market orders. Okay, market orders, which means you are buying at the current price of the market. Okay, but talking about the pending orders is the opposite, is what market orders is not. So pending orders, we have four major pending orders type. Okay, we have the buy stop, we have the buy limit, we have the sell stop, and we have the sell limit. Okay, let me just say two major, because whether you're buying or you're selling, there are two major types, which is stops and limit. Okay, now I'm going to use the buying and selling in illustrating this. When it comes to pending orders, remember I said market orders are the price at the current time. Okay, so you understand what market orders is. Market order is buying at the current price. Buy stop is buying at a price, at a higher price. Okay, buy limit is buying at a lower price. Sell stop is selling at a lower price. Sell limit is selling at a higher price. I'm going to be explaining them one by one. Now, let's say the current price of the USD JPY pair is 155.51. Okay, this is the current price. Okay, I'm going to give the scenario here. Let's say you want to buy, but you want to buy at a higher price. Let's say your strategy gave it an entry to buy it at 5.5. Okay, just about 10 pips difference. This is where you want to buy your price, but this is the current price. So because it's the current price, you can't enter the market here, and you want to buy at this exact price, but you don't want to miss that. The pending order you're going to use is the buy stop pending order. Now, the buy stop pending order will tell price that whenever you get to this point, please buy my trade for me. Okay, so if the trade goes up, buy stop. Okay, that is it for buy stop. Now, what is buy limit? Buy limit is the lower price you want to buy. So let's say this is still the current price, but your strategy said you should buy at 154.51. So this is going to be your price. You are going to use the buy limit pending order. Buy limit pending order will now tell the market that whenever you drop to this position, please buy this product for the owner. That is what buy limit is right now. Okay, buying at a lower price. You set the lower price other than the market or current price. Then same goes to sell stop and sell limit, the opposite. So the USD JPY pair at 155.51. Okay. So when are you supposed to use sell stop? Let's say you want to sell your product, but you don't want to sell it at the current market price. You want to sell it at a lower price. So if you say you want to sell at this point, you are going to use sell stop pending orders. Sell stop pending orders because you want to sell at a lower price. But if your strategy gives you an entry to sell at a higher price, maybe price has gone below where you're supposed to sell, you use the sell limit order. Let's say you want to sell at a higher price to make more profit. You use the sell limit order so that once price grows up to where the price you set is, it will trigger automatically and set and enter your position with the lot size I choose to enter. So that is that about pending orders in your Forex account. If you open your MT4 trading chart, you see these orders listed there. It's used for market execution. In case price is not where you want it to be, you can use this order to enter your market so that when price get to your preferred price, then you to trigger automatically. That being said, let's go to the next topic. In Forex trading, stop loss is a price, okay? Is a price limit that you are willing or the trader is willing to take a loss, okay? Is used in cutting down the bleeding. That is why it is introduced. You are not always there in the market to manually close your trade or to manually enter depending on others. That's why these things are introduced. So you set stop loss because you are not going to be there maybe when the price is going, but you're telling the market, whenever it gets to this price, please take me out. I don't want to lose more than this. Okay. So stop loss is set to cut the loss in your account. If this is going to be your entry price, okay, and what is stop loss right now? Stop loss is the maximum loss you are willing to take. Let's say you want to risk 10 pips as your stop loss, okay, and you are buying this product, buy, which means you are predicting it goes up. Let's say this is the chart and this is the market right now. This price going, and this is the point you are willing to buy, and this price is 155.1. This is where the price is. So in setting your stop loss, you are not telling the market that please, if this price, I'm using this example now, if this price falls down in 10 pips, please take me out of the market. Now if your entry price is this, removing 10 pips from this, it means that the price for your stop loss will be 154.51. If you don't understand how to calculate pips, watch our previous video. We explained how to calculate pips on different pairs, JPY pairs and other pairs. Okay, so this will now be your stop loss. Stop loss is always in price. So what's the price for your loss? Is going to be this price right here. Again, stop loss is the maximum price you are willing to take a loss. That's how it goes. So this kind of trade, if it goes down at this point, it will automatically close your position, giving you the loss. So in simple terms, since we've explained what stop loss is, let's explain what take profit is now. Take profit is the maximum amount or the maximum price you are willing to sell back the product you buy. Okay, still using this USD JPY example. If you want to set take profit, it's supposed to be higher because you are buying, so you want to make money. Setting your take profit is what price right now are you going to close this position in profit. Okay, your take profit will now determine the amount of money you get in your trading account. Take profit again is price. So let's say this, you enter this product, your take profit is supposed to be higher. Let's say you want to use 20 pips as your take profit in this position. Your new take profit price will be 15 plus 20 pips 7.51. Again, if you don't understand how pips works, watch our last video. I explained it there. So take profit is just like stop loss that causes bleeding. Take profit gives you the money at the maximum price you want to close your position. So going back to the chart again, let's say this market is growing and you entered at this point. Okay, you buy the market grows, this is where you say your TP. Okay, 20 pips difference, which means if the market gets to the price, your TP, it will automatically close. It's a very, very simple thing. If you open your trading platform, like the one you're seeing on your screen right now, the left hand side is where you set your stop loss, the right hand side is where you set your take profit. Okay, that being said, let me just give a perfect example that will illustrate all of these things that I just said. Now watch this perfect example that explains these three terms. Okay, now let's say this is a signal that you got, and you are asked to buy the euro USD at 1.1550 price. Okay, your stop loss 20 pips, which means if the product drops by 20 pips, it will take you out. Your take profit 40 pips, which means if the product increase by 40 pips, it will give you profit and close automatically. So let's say, for example, the current price right now is higher than this. If this is the current price, it means price is already higher than what you are supposed to buy. What do you now do? What kind of pending order are you supposed to use? The pending order to use in order to buy at this current price is the buy limit, which states that to buy at a lower price other than the current price. So using the buy limit, buy limit to enter this trade, you set your buy limit order, set your lot size, and you set the price that you want to enter. So let's say current price is lower. If the current price is lower than this point here, 1.1540, this is a lower price other than this. So if you exactly want to buy at this price, you set a buy stop. Okay, it's going to be a buy stop order, pending order, that you are going to use because you want to buy at a higher price other than the current price. But in most cases, this is actually a drawdown for you, and it's important to buy at the current lower price because it's a positive one for you. But if you want to enter the exact price, you use buy stop. Buy stop means if price is going up, it will automatically trigger for you when it gets to your price. So in setting the stop loss right now, this is 20 pips. In subtracting 20 pips from this, it means your stop loss price is going to be SL. It's going to be 1.1530. This is your stop loss, and your take profit is going to be 40 pips, which is 1:2 risk reward ratio. What 1:2 risk reward ratio means, you are risking 1x to get 2x. So you are risking 20 pips to get 40 pips. 40 pips is twice what you are risking here. So 40 divided by 20 is 2, which is where you get 1:2 risk reward ratio, a fair risk reward ratio to use. So where will your price now be if you are using 40 pips as take profit? You add 40 pips to this, which is now give you 1.1590. This will be your take profit, and this will be your stop loss in price. Okay, now like I said, the left hand side is where you set your stop loss, the right hand side is where you set your take profit in your trading platform. So if the price is lower, you use buy stop to enter this position. If the price is higher, you use buy limit to enter at this current price. Same thing goes to selling position. Okay, it's the exact opposite case. Let's say this signal is a sell signal. So if this is now a sell signal, and they're asked to sell this product at this price with 20 pips as stop loss, 40 pips as take profit, how is it going to look like? And this is the current price. So what do? You use your pending order to tell price, because this price is lower, okay, and you want to sell at a higher price. You're going to use a sell limit order to sell at a higher price. Okay, you now tell price that once you get to sell limit, okay, once you climb up, which means price goes up, enter your trigger and you're expecting it to sell. Okay, sell limit. You want price to go up, trigger your position and then sell. What if the price is actually higher than what you're supposed to sell? What pending order are you supposed to use? What if price is this high? Okay, what pending order are you supposed to use? You're supposed to use the sell stop order. Sell stop order right now, you are telling the trade that at your current price, once you get down, please trigger my entry at the sell stop here and continue to go down. That's sell stop order. So because price is higher, I use a sell stop order on this position. So what will be your stop loss and your take profit in 20 pips and 40 pips, which is 1:2 risk reward ratio. Now in this case, because you are selling, your stop loss is going to be higher because you are selling. So if price goes higher, it means it will take you out if it goes by 20 pips. So your stop loss in price will be 1.15 at 20 pips to this 70. Your stop loss, your take profit will be lower because you're selling, you want to make money if the market goes down. Extra 40 pips to this price is going to be 1.15. If you remove 40 pips from here, 10. This is a sell stop. Okay, use a sell stop order to enter your trade. So this is how exactly it looks if this position is a selling position. That is that for this video explaining stop loss, take profit and pending orders. This will help you into knowing how to use your trading platform like the MT4, the C Trader or the MT5. Exactly what I say here is what will happen when you follow the steps. See you guys on our next video.